Hello and welcome. I'm Laura Superno, Research Editor at BNamericas. In this video, we'll outline some of the main findings of our 2025 Mining Capex report. BNamericas Capex research covers a sample of 31 mining companies key to the Latin American region. This includes the world's biggest mining companies that operate in Latin America, as well as the most important regionally based companies. Because most of the operators do not provide information on their spending by jurisdiction, the numbers shown here represent the company's global spending, giving us a broad view of expenditure trends in the mining industry. And I invite everyone watching to review our 2025 Mining Capex report in full for details regarding the spending focus of each company. Mining companies are set to increase capital expenditure in 25, but the pace of growth is slowing for the second consecutive year. We compiled the reported spending plans of 31 mining producers central to the industry in Latin America and found they plan to spend $78.2 billion globally in 2025. That's a 5.4% increase from the $74.1 billion they spent in 2024. It's a smaller increase than the 9.6% growth registered last year. And in fact, barring the pandemic year of 2020, this would be the smallest Capex increase in percentage terms since at least 2017, which is the year that our records begin. This slowdown is led by the biggest players in the industry, many of which are slowing down their spending growth or even reducing spending slightly. While the largest operators continue to plan historically high investment levels, the pace at which they're ramping up spending is noticeably declining. For example, Rio Tinto's 2025 Capex guidance is $11 billion and BHP's is $10 billion. Each of those is roughly double each company's 2017 spending. But while both companies increased spending by over 30% in 2024, they're targeting much smaller increases in 2025. 15% for Rio Tinto and 8% for BHP. Other major players are also slowing down. Glencore plans a 7% Capex reduction after growing 17% in 2024. Codelco's spending is expected to remain flat this year after a 27% increase last year. Anglo American will decrease its investment by 7% following a 4% drop in 2024, and Vale is maintaining its spending levels flat. Among the top gold producers, we're seeing more mixed signals. Barrick Gold is planning a significant increase, while Newmont is set to reduce its spending modestly. This chart shows the operators in our sample that plan to spend at least $3 billion in 2025. It's the previous chart, please. Two companies moved into this category in 2025, Barrick Gold and Antofagasta, expanding the group from 8 to 10. Together, these 10 account for 75% of the total planned spending among the 31 companies. And in dollar terms, we can point out Antofagasta, which will have the largest Capex hike in 2025. Now moving on, another 10 companies in the sample plan to invest somewhere between $1 billion and $3 billion in 2025. As opposed to the biggest spenders in the previous slide, this middle tier group is planning an average increase of 11%, which is almost double the rate seen among this tier of companies last year. Southern Copper, Anglo Gold, and MMG are targeting the biggest increases among this group of companies. The remaining 11 companies in the sample have spending plans of less than $1 billion. Among them, there are some dramatic shifts. Peruvian tin producer Minsur plans a 114% spending increase, while Albemarle is slashing Capex by 56%. Looking at the different types of metals, there's a noticeable shift between industrial and precious metals. In 2024, both groups increased spending by about 10%, but in 2025, the producers in our sample who are focused on industrial metals, such as copper, iron ore, zinc, or lithium, are set to grow Capex by just 4%. The precious metals miners in our sample are planning to raise overall Capex by 12%. Fresnillo leads the precious metals group with a 43% planned increase. Lithium producers are facing the steepest reductions. SQM plans to cut spending by 31%, while Albemarle's 56% reduction marks its second year of declining investment as it already fell by 19% in 2024. And lastly, the breakdown between growth-oriented and maintenance spending reveals a somewhat surprising trend. Despite the overall slowdown in Capex growth, companies appear to be focusing more on expansion than on maintenance, as an overall. Among the 20 companies that report their detailed spending data, expansionary Capex is expected to rise 11% in 2025, while sustaining Capex is set to decline by 5%. Precious metal miners are leading the charge on growth spending. Their expansionary Capex will increase by 28%, while sustaining Capex will grow just 1%. On the industrial metal side, these producers are increasing growth Capex by 6%, but cutting their sustaining spending by 9%. In short, it appears that the mining sector is adjusting to a more volatile investment environment shaped by economic uncertainty, regulatory hurdles, and shifting demand dynamics, as many operators are planning a more modest Capex. But even as overall growth slows, the continued strength of expansionary spending shows a continued commitment to long-term production expansion. This concludes today's presentation of the highlights of BNamericas Mining Capex 2024-25 report. The full report is available to BNamericas subscribers on our platform. Thank you for watching.